recording now. It is December 4th. We're doing a little review before the final exam. And all right. And we're looking at number 14. The cash account shows a balance. All right. So this morning, everybody wanted more practice on the bank reconciliation. So it doesn't surprise me that you all do too. So, okay. Let me bring up a spreadsheet so we can kind of use that. Okay. All right. So what I said to people this morning, now can you see both the Excel spreadsheet and the practice exam?
Yes.
Yeah.
Thank you. All right. So what I said this morning is, unlike the multi-step income statement and the classified balance sheet, where we have a really prescribed statement format where you have the first line of the statement is the company name, the second line is the name of the statement, income statement or balance sheet. Third line is the appropriate date format. For the bank reconciliation, I'm not as picky about that. We don't usually publish bank reconciliations to the general population. We just do it and then show it to the accounting supervisor and everybody's happy. So for test purposes, keep it simple. So they're not telling you the name of the company here. You could just say Bank Recon here, and then go ahead and put bank side and book side. And I always like to put the bank side on the left just so that I don't get confused. It doesn't matter if it's on the left or the right, but if you're doing bank statements and you're practicing them, it's a good idea to have that visual reminder. And then we just made a quick template this morning in class in the review session. And we said, what are the two items on the bank reconciliation, on the bank side of the bank reconciliation? What are they? Go ahead and put it in the chat. And what are the two items that go under Connor? Yes, perfect. Okay. Deposits in transit. I'm going to deposits in transit and outstanding checks. Okay. And then you come down and you add those up, adjusted bank balance. Okay. All right. So but the first item, I left that off. The first item is what? We've got to be, what's that? What's the first item on the bank statement? And looking in the chat, balance per bank. Great. Okay. Balance per bank. And we get that from the bank statement. It tells us that. Okay. Now let's go over to the book side. And the book side, just think about that T account for cash. That's what we're talking about here. It's just the T account for cash. So on the book side, we go to the T account and we say, what's the balance right now as of this date? And this date is, they aren't even telling us the date, but whatever the date is, that's the day we look at the balance per book. So we say balance per book. And again, it's the T account balance. It's the cash account. Some problems will call it the cash journal. So different things, okay? Okay, so lots of data here. And again, I say to students, go to the question first. So the question is, highlight, okay. The question is right here. Nope, right there. The correct balance in the cash account was. And so what are they asking? They are asking for the adjusted balance, the adjusted cash balance. Right here, after we've started with that beginning balance and made any adjustments. Okay, so let's read through these problems and try to figure out where each of these items go, if anywhere. But before we do that, we've identified deposits in transit for the bank. Do we add those or do we subtract them? Just show me with a hand gesture if you're visual, or in the chat, you can just write it in. So is it a add or subtract? Okay, it's going to be an add. So let's just show that in a bright green. Well, that's not very bright, but we'll live with it. Here we go. It's brighter. Outstanding checks. What are they? Do we add or subtract? Yeah. So we subtract those. All right. So I'm just showing the ads, but we can show it like this too. Okay. So we start with the bank. This problem isn't about the bank, so we don't even need this side of the state of this spreadsheet. So let's just work with the book side. Now, what are the things we add to the book? What are the things we subtract from the book? What do we add to the book balance? Go ahead and put it in the chat or call it out. What kind of a deposit, Naomi and Mona? And basically, we add or subtract the book items based only on what is in the bank statement that is not already, we don't have a journal entry for. It's not reflected in the T account. So if there's something in the bank statement where the bank collected money, but we haven't recorded it yet, we would put that on our books. So any collections made by the bank. Okay. And we're going to add those. Let's say that we had a note receivable and there was interest on the note. You have to read that problem really carefully. If it was interest paid and interest that increased the bank account, then you're going to add the interest, and it's going to be interest revenue. Interest revenue. And that's going to be another add. Okay. But what if it's like the problem we did on my PowerPoint slides, where the bank charged a fee for doing the collection? In that case, it would be a collection fee or interest expense. So it's kind of like if you've ever had to get a cashier's check, you want a check for $100, but it actually costs $105. They charge a fee for creating the check. So if the bank recorded a collection fee, then that's going to be subtracted. So it's like one more bank fee, and then banks charge a lot of fees. Okay, so those three items are all related to if the bank collects something for the company. But we have two other major categories. One of them is NSF checks. And the other one is service charge. And then the other category, and it does show up in this problem, are errors. And errors can be added. Correction of errors can be added. Correction of errors can also be subtracted. Okay. Now, does everybody know what these things are? Does everybody know what an NSF check is? An NSF check is when the customer pays you, it got deposited and recorded in your bank statement, the company's bank statement, and then later, the customer's bank said, nope, not enough money to cover it, so everything gets reversed and it gets deducted from the bank statement. So this is from a customer check that we say bounced. It bounced back to the company, okay? All right. Service charges, the bank charges the service charges, and it's just another bank fee. So it's a bank charge. Collection fee by the bank. Oops. Same deal. The collection fee is another bank charge. Okay. Bank charge. Okay. So banks can have charges that as a deduction. Okay. So we've covered everything except for errors. And so we do have an error in this problem, but let's start the problem out with what we know. And what I told the students this morning is get these templates down, memorize these. Know that on the bank side, you start with the bank balance, you add deposits in transit, you subtract outstanding checks. On the book side, know that you start with a balance per books, you add any collections, you subtract any bank fees, NSF checks, and service charges. Put down as much as you know and hope you get it right in the right column so you don't confuse the columns. So make sure everything on the book column is something that the company is looking at their bank statement and saying, we didn't record this yet, we have to record it. All right, so do we know what the balance per books is? The cash account shows a balance of 45,000. That's what we're talking about. This is the beginning balance, the balance as of this date on the cash account. Okay, so we've accounted for one set of money. The bank statement does not include a deposit of $2,300 made on the last day of the month. So it's not on the bank statement. Where would this, what kind of item is this? In other words, the company recorded it, but it's not recorded on the bank statement. Where would it have gone on the bank reconciliation? Put it in the chat. Mona, can you be more specific? Where does it go on the bank reconciliation? It's not the balance per bank, Jeff. It's an adjustment. So the company got money, but the money didn't get into the bank in time for the bank statement. What do we call that? Connor, you are correct. Deposit in transit bin, you are correct. So it would be over on this side. But remember, we don't answer the question they're not asking. They're asking about the cash account, not the bank adjusted balance. So that's an example of when the problem gives you extra information that you don't really need. Okay. Then it says the bank statement shows a collection by the bank of 940. Stop. What do we do with the 940? What category does it go into here? Type it in the chat. Nope. Connor, no. The bank statement shows a collection by the bank of 940. Ben, yes. Vincent, no, it's not a fee. It says the bank statement shows a collection. Mona, yes. So it's a collection by the bank and the company saying, oh, good, the customer or whoever paid the bill, and now we have 940 more in our cash account. Okay, the next one was, and a customer's check for 320 was returned because it was NSF. So it's going to go here and it's going to go in as a negative for 320. Okay. Now we have a customer's check. Oh, these are great problems. These are two errors. Okay. A customer's check for 450 was recorded on the books as 540. And these are two separate problems. And a check for 79 was recorded as 97. Okay. Okay, so let's just go down here and say, I want to do a little T account. All right. And these are two T accounts. And one of them is going to be for accounts receivable. And what do you think the other one's going to be for? Accounts payable. Okay. All right. So let's just think this through. And so A customer's check for $450. So in other words, the company made a sale, they billed a customer, the customer paid $450. And the way the company knows, so the company's comparing, oh, look, we have a check for $540 that we recorded. I'm not talking about writing the check. The check was written correctly. I'm talking about when they did the journal entry. So the company's saying, oh, we did a journal entry for $540, but look, the check cleared the bank for $450. They pull out the check. They said, yeah, it was $450. We recorded it wrong in the journal entry. Okay. So how do you record a customer's check? You debit cash and you credit accounts receivable. So they did that. They recorded it wrong, just like that. Okay. They should have recorded it as $450 and $450. Okay. But right now in the accounts receivable account, they showed it as, or in the cash account, they showed it as having received $540 when in fact they only received $450. Okay. So you take the difference, 540 minus 450, and you get what? What's the number? Is it 90? Feels like it should be 90. Let's see. It is. Okay, thank you, Naomi, and thank you, Vincent. Okay, so we're on the book side, and now we have an error. We have a customer check error. We erroneously recorded a deposit for $540. We should have recorded it for $450. The difference is 90. Do we add that to cash or subtract it from cash? So we erroneously wrote it here. Bad account should have been $450. Yeah, we subtract it. Okay, so we're going to subtract that customer check error, 90. Okay. Now we have a second error. Now, this problem specializes in being very small and efficient. So it's making you think this through. Now it says a check written for $79. So when a company writes a check, does that increase cash or decrease cash? Yes, good, Vincent. Yeah. So again, let's go down here and we say, all right, over here, we write a check and we say, we decrease cash. We have accounts payable and cash. Okay, so we had a customer's check. Let's move this over a little bit. We had a customer's check for $79, but we wrote a check for $79, but we recorded it as 97. Okay, that was the bad journal entry. It should have been 79. What is the difference? 18. All right. So here this is the bad journal entry. Here's the good journal entry that we should have done. We didn't do the good journal entry. We did the bad journal entry, the incorrect journal entry. I guess I shouldn't be moralistic. The incorrect journal entry. So we deducted cash $97. We should have only deducted cash $79. How do I know this is accounts payable? Because it was a check written by the company. And when a company writes a check, it's going to be accounts payable is going to be involved. When a company receives a check from a customer, accounts receivable is going to be involved. So we have 18. Do we add the 18 back to cash or do we subtract it? How do we correct this? Naomi says add. Anybody else? Vincent says add. Oh, somebody else said Naomi and Connor say add. Okay, so we voted and 3 of you say, 3 out of 3 say add. All right. So now we have company posted check wrong. Okay. And you guys are saying we add it. So we're going to add back 18. Okay. Okay. So customer check error, that's affecting accounts receivable. Company error, that's accounts payable. All right. Okay. I'll move that down. Okay, so have we got everything here? I hope so. Oh, we got the right answer. Yay. Okay. It agrees with the. All right. Any questions on that one? Okay. All right. Do you have any other questions for me? So that's in some ways that's a simple bank statement because we're only doing half of it. We're only doing the book side. We're not doing the bank side. But there's a higher level of complexity because you guys need to know how to do corrections. Okay. This other stuff, collection by the bank, increases the books, collection fees, interest revenue, NSF checks decrease the books, service charges decrease the books. Apparently this bank doesn't charge service charges. So those are just nothing. You wouldn't have anything there. Okay. All right. If you want to go over anything else, send me a text or not send me a text, put it in the chat. Where would note receivables go? Okay. So, oh, by the way, let's do the correcting journal entries for these. So Connor, in this statement, the bank statement shows a collection of $940. Okay. So in the one of the other in the PowerPoints, it said note receivable. It has to tell you that, or they don't say note receivable, they say note. They'll say the bank statement shows a collection of a note for $940. If they don't tell you it's a note, always assume it's accounts receivable. If they tell you it's a note, then it's notes receivable. Okay. All right. So collection by a bank 940. So let's just, so anytime, so all the adjusting journal entries. So I want you to set yourself up for success. All these adjusting journal entries are the 940 minus 320 minus 90 plus 18. All of those are going to have cash as either a debit or credit and another account as the corresponding account. So collection increases cash. So that adjusting journal entry is going to be a debit to cash of 940. And because we know it's not a note receivable, it's accounts receivable, we're going to say accounts receivable 940. Now, what I tell my students is if you don't know what that other account is, set up the journal entry as a debit or credit to cash, depending on if it's an increase or decrease, and you will get partial credit. Okay. We don't have interest revenue. We don't have collection fee. NSF check cash is going down. So it's going to be a credit to cash of 320. And the debit will be, in this case, it's a customer check. So it's also going to be accounts receivable. Okay. Customer check error. It's a credit to cash because it's negative. Cash, 90. And since it's a customer, it's also going to be accounts receivable. And finally, 18, company posted a check wrong. That's going to be a debit to cash. And it was the company's own check, so we know that it's going to go to accounts payable. All right. So the problem didn't ask us for correcting journal entries. The problem didn't ask us for correcting journal entries. I'm just showing them there. Okay. All right. Let's see. Okay, let's see. Ryan, I have a question for practice exam. Practice, which question on the practice exam, Ryan? Are you still here, Ryan? Did you leave? Okay. Oh, there he is. Number 2. All right. Okay. Let's take a look. So there was confusion with the practice exam. There was some that were different than this. Does your practice exam look like this? Yes? Okay. So let's put this back up. All right. So something to be mindful of. Everything fine, but not average. Okay, let's see. Let's go look at that. Hang on. Average cost. So first, you know that you only, this is a little bit of a tricky question in that you've got purchases and sales commingled. 23B, we'll take a look at that. So you want you don't, when you're figuring out the cost of goods sold and the ending inventory, you only care about the inventory and the purchases. Okay. The selling price, you're going to need that to get total sales, but you don't use it to calculate FIFO, LIFO, and average cost. Okay. So what we want to do is we want to quickly figure out, let's see, units, cost per unit, and then extended cost. Okay. So let's just take those 3. Can you see, is that too small? So we've got a cost layer here, 2, 1, 2, 3, and the pattern here is the costs are going up, right? 224. Okay. So we've got 30, 280, 190, and 90. And then we've got cost per unit. We've got 105, 130, 135, and 145. And then we've got extended cost. How close is it, Ryan? Oh, I think he's offline. Okay, so the total cost. So total units. So we have total units of 590. Okay. And the total cost of those units was 78,250. Okay. For average cost, we take total cost, total units, and we divide it out. And I got 132.63. And what does the solution say? It says 132.63. Now, sometimes students only do what was sold. Okay, so let's come down here and look at, yeah, but you do that first, Brian. Okay, so we know how many units did we sell? We sold 260, 180, 110, right? And then ending inventory, we have 40 units, right? Okay. But when you're figuring out average cost, you don't figure it out based on the units you sold. You figure it out based on goods available for sale. So we had 590 units and they cost 78,250. Then we get our per unit cost, which is this. Okay. We don't And then we apply it. So like for cost of goods sold, we'd say we sold 550. We sold them at 132.63, and therefore the cost of goods sold. And remember, for average cost, you don't just tell me the answer is 132.63. The problem asks you for cost of goods sold and ending inventory. So this is what this would be your answer, is cost of goods sold, and then ending inventory is going to be 40. And it's going to be 5.3. And no, I don't want pennies for the exam, please. Just round that up. So let's just round these guys up. Okay. So 72945, 5305. Okay. Does that make sense now, Ryan? Yay. Yay. Okay. All right. We have another question. It is 23B. Okay. Okay. How are we doing on time? Oh, we're good. We got plenty of time. Okay. Okay. So again, lots of information, right? Go right to the question first. Prepare the journal entries that Noble Company made to record the sale, the return, and the collection. Okay. I'm going to ask you a second question in the chat. Oh, Ryan, your calculator says something different. But why are you multiplying by, let's go back to that. So I have 550 times 132.63. I get this number. You get 946. Oh, you know what? I'll bet you anything. Okay, got it. That's close enough. What this problem did here, I forgot to round it. So you probably rounded it and I didn't. So that's what's causing the dollar difference. Okay. So if you put that number in the solution, I would accept it. Okay. Oops, I went too crazy. So my problem is actually using this. Okay. So let me change my problem. I'm going to do this. I'm going to say round this sucker. Yeah. And I got your number, right? Okay. So then I get your number and let's make it. Is that what you got? Sorry about that. I should have rounded them. Okay. But if you're that close on the exam, I'm not going to be worrying about pennies, but I will, I'll try to round them. Okay. Good. All right. Okay. So go to the question. We want 3 journal entries: sale of merchandise, return of merchandise, collection of merchandise. Tell me whether this is perpetual or periodic. That has got to be your first question. You answer that question wrong, you're going to get a different answer. Is this a perpetual system or a periodic system? We're doing 23B. Oh, 2 messages. Perpetual. Yes, it is perpetual. You know this because they have to tell you. And there it is. They use a perpetual inventory system. Okay. There's no guessing here. They have to tell you. All right. Okay. So go ahead and give me the journal entries without numbers for perpetual system for a sale of merchandise. What does it look like? It's 4-line journal entry. Go ahead and put it in the chat. Debit, credit, debit, credit. Good. Okay. That's it. Accounts receivable. Okay. And please remember, and no, you don't need to put descriptions on journal entries for exam. But I'm going to put it here. Okay, so that's one. And we just got to figure out the dollars. Okay, how about two? What's the journal entry when we return merchandise? Go ahead and put it in the chat. And this time, direct message me so more people can answer this one. How do we do a return? So 4-line journal entry. How do we do a return? Connor, you are correct. Anybody else? So this is your sales transaction, right? I want to know what your return, when you make a return. And we're doing the journal entries for Noble Company. So that means, Ben, that the customer is returning the item. We're not purchasing an item, we're selling an item. Anybody else? How do we do a return? So this is what you guys did so well on the last, you actually did really well on the last exam on this. So, and then the last part is, oh wait, I'll do this. To record collection. Last part is so I'm pausing to just give you guys a chance to get this right. All right, so Ben, that looks great, Ben. Okay, so we got 2 correct answers. So if you have a sale, let's go ahead and load the sale transaction in. Okay, so we have Noble Company sold merchandise to Fugate on account 73,000. So that's going to be 73,000 here and 73,000 here. Okay. The cost of the merchandise was 43,800. So that's going to go here. Okay. And we're just all going to be, so that's your 4-line sales journal entry for perpetual. Okay. Now, when we do a return, we essentially reverse this transaction. The return is only for 3,000. Okay. So we're going to come over here. We don't use sales. We use sales, returns, and allowances. But everything else is identical to how it's up here. So we are reversing accounts receivable. We're reversing cost of goods sold and inventory. Okay. So we know the dollar amount of the return is 3,000. Now inventory says during the discount, oh, wait a minute, hold on. During the discount period, Fugate returned 3,000 of merchandise and paid its account minus the discount by remitting 68,600 in cash. Okay. All right. So what are we going to use for cost of goods sold for the 3,000 return? How are you going to come up with that amount? Is that what the question is about? Let's see. So we need a system here. How are we going to come up with the cost of goods sold? All right. So all we know is that we did sell 73,000 and that cost was 43,800. Okay, that's all we know. And of this inventory, 3,000 in sales price came back. So we're going to create a ratio and say, what percent of cost out of the sales? So we say 43,800. Sorry, I don't want to do it there. I want to do it over here. 43,800 is how much the inventory cost. And you can see cost of goods sold is 60% of sales. So we're going to do the same thing down here because it's the same inventory. So we're going to say if it's 60%, 60% times 3,000, keep doing it, plus 0.60 times 3,000. And we're going to get 1,800. Okay. So you have to come up with some method of how we calculate the cost of goods sold when it doesn't tell it to you. But you already have this evidence from above. Okay, finally, the customer takes the discount and they're not telling you what the discount is. They're just saying it's, if they pay in 10 days, they get a discount. Okay. So they got cash. We know that. They got cash of 68,600. They would have cleared accounts receivable out. So let's go back and do go. I want a T account. Okay. So how much do we owe? So we originally had accounts receivable of 73,000. We returned 3,000. And our accounts receivable balance is what? 70,000, right? Okay. So we're going to clear that out. Accounts receivable, 73,000. I'm sorry, 70,000. But the company only collected 68,600. So the balance is going to be sales discount. And we just say, what's that difference? It's going to be what, 1,400 equals plus 1,400. Okay. Does that make sense? So we had to back into what sales discount was. Now, you can calculate it now. We can say 1,400 divided by what they owe, which was 70,000. It was a 2% discount. But the problem didn't tell you what the discount was. They just gave you the, oh, here's 68,000 we collected. You know, accounts receivable has a balance of 70,000 after the return. So the difference is sales discount. Okay. All right. Okay, our time looks like it's almost up, and I have a request to do number 5, which is the bank reconciliation. We did that this morning, but I'm happy to do it again. When doing perpetual, what is the situation when there is no discount? It just goes to inventory. Just trying to remember as I missed it on the last test. Okay, that's with a purchase transaction, Jackson. So these are sales transactions, okay? So take a look at this. I'll show you real quick. It is, there's a side-by-side comparison of the, if you go to my PowerPoints at the end, After you've learned perpetual and periodic, I do a side-by-side comparison. It's the same as what's in your book as well. Come on, here we go. All right. Can you see PowerPoint right now? Yes or no? Can you see my PowerPoint? Yes. Okay. So here's perpetual. So let me go to sales. These are sales. We just did the sales transaction, and you don't need to put the word merchandise. You can just say inventory. Okay. Those are the sales transactions we just did with perpetual. But let's back up and say, now what about the purchase transactions for perpetual? You buy the inventory, you pay the freight, you return the inventory, and then you pay your bill and you take the discount. All of that goes to inventory. If it's periodic, then we use these 4 unique accounts: purchases, freight in, purchase returns and allowances, and purchase discounts. Okay. Excuse me. All right. Okay, I'm going to stop sharing that. All right. Okay, I'm going to, because Mona asked, I will go back over. Are you still here, Mona? You are. Okay, you better be here. Because Mona asked, I will go back over the bank recon. So anybody who wants to stick around, that'll be probably another 15 minutes. That's about as long as I'm going to do it, at least. All right. So let's go back here and let's just grab this. I'm just going to copy this one and we'll start a fresh sheet. All right. And we're going to get rid of all this data because we have new data. Okay. So the way we started out today was, I said, for a full-blown bank recon, let's make sure, to the best of your ability, this is how we started today. I said, to the best of your ability, start building your template. Bank recon at the top, doesn't have to be anything fancy. I like the bank on the left and the books on the right, okay? Get used to the idea that you got to memorize what goes where. The stuff under the bank, first you load in, balance per bank on both of these, balance per book on both of these, and then these adjustments only go where they go. They don't go in both places. It's kind of like the income statement and the balance sheet. An account only goes to one place. See you later, Jackson. Are you leaving? No, you're not. You're still here. Okay. So under the bank, you're going to see deposits in transit. Under the bank, you're going to see outstanding checks. So deposits in transit means the company got the money. It's included in the cash account, the T account, on the company's records, but it's not showing up in the bank statement because of timing issue. Oh, sorry, Mona. Thank you. Yeah, no, I did not turn on screen share. Let's do that. Okay. Sorry. This is how we started today with the bank recon, and want to make sure. Hang on, I want to get rid of all this extra stuff here. All right. So bank recon does not have to be fancy, but I have to understand what you did. All right. I like the bank on the left, books on the right. I don't care what you do, just be consistent when you practice so you don't get it confused and backwards in your brain. Okay. Under the bank, you pick up the bank balance from the statement, and then you add any deposits in transit that the company collected but are not on the bank statement. You subtract outstanding checks, and that means the company wrote checks. Think accounts payable. The company wrote checks and they have not cleared the bank yet. Okay. On the books side, you start with a balance per your T account cash, and then you add collections by the bank. You add any revenue that the bank records that wasn't on the books. If the bank is charging any weird fees, if there's an NSF check, you subtract it. You subtract fees by the bank. You subtract service charges. And then in that one problem that we did we had a customer check error, and we had a company check error. Okay, so let's look at number 5, and I think the version you guys have might be different than mine. Am I correct? So let's take a good look at this. This is number 5. If your form says September 30, change it to October. And if your form says 10,000 something, change it to this number. Okay. The problem that you got was actually more complicated than you need at this time. Okay. So, and I think that was an issue for the online students. I can't remember. Okay. All right. So let's just look at this. We're going to pick up, and I just want to tell you guys, don't double, triple check this stuff. This 8736 is the balance per books. Okay. I can't tell you how many times students have just made a transposition error and put it in the wrong column. So that's what's going to go here, 8736.01. Okay. All right. So then we're back on the bank, on the, over here. Okay. Now, how do we find the bank statement balance? It's going to be on the statement right here, or it's going to be down here, but the balance is 11,950,101. And this problem is structured so that it's more like a real bank statement, bank reconciliation. Okay, so we're going to have 11,951. How about we get in the right spot? Okay. You guys should all be able to do this much, right? Okay. All right, so now we say, are there any deposits in transit or outstanding checks? So this is how a real bank statement works. You look at, you read, so let's go to the problem, and the problem says, give us a bank reconciliation October 31, and then prepare the journal entries, okay? So what's new about this bank statement problem, bank reconciliation problem, is you haven't seen this before. This is the activity that the company recorded. The company recorded writing checks, okay? The company recorded writing checks, and the company recorded deposits, money coming into the company, also called receipts, all right? So what you're seeing here is transactions that the company has already booked in their T accounts, okay? So what you do is you go line by line and you say, check number 17, did it clear the bank? Yes, it did. And here down here on the bank statement, they're showing checks. So you've got 3 columns of checks, and then deposits. You've got 1 column of deposits. Okay. So then you say check number 18, did it clear the bank? It did. There's a problem with it, but we'll come back to that. Check number 19, yes, cleared the bank. Check number 20 did not clear the bank. So check number 20 is outstanding. Check number 21 cleared the bank. Check number 22 cleared the bank. Check number 23 did not clear the bank. Check number 24 and 25 did clear the bank. So we have 2 checks, check number 20, check number 23, that did not clear the bank. So let's go put them up here. Outstanding checks, number 20, number 23. They are going to be subtracted from the bank balance. And check number 20 is 587.50. And oops, I don't want that. And check number 23 is 1687.50. Okay, good. So that's our first pass. Now we're going to look for deposits in transit. So let's go back here and say, did these 4 deposits clear the bank? 843.86, yes. 941.54, yes. 808.58, yes. 967, no. Okay, so that's our deposit in transit. 967, okay. Now, that's it for the bank side, okay, which is good news. And then the question is, what do we do on the book side? Now, the book side is all about looking at the bank statement and saying, what's on that bank statement that is not recorded by the books? And this is where you look at the bank statement and you also read this additional information, okay? But let's go down and just look for any of the special charges. So again, we're under the deductions, the checks. We have an NSF check for 230. So we're going to subtract that. We have a service charge of 35. Oops, not doing a great job here. Service charge of $35. So we're going to take that out under service charge. And why is it 967? Let's go look. Because here's the receipt that the company recorded up here. And it's not been reflected down here. So it's still in transit. There's a timing issue. Okay. These 3 receipts, they're all recorded on the bank statement. This last one, it was right on October 30th. It didn't get into the bank in time. Maybe they left it in the safe on a Friday afternoon. And that was the end of that. Okay. And they deposited November 1st. Okay. You got it. Okay. All right. So we've got this one. And finally, we've got this credit memo. That means money came into the bank. We know that because it's under deposits. Okay. This is under checks. Okay, so what are we going to do with, we've recorded these first 2. What are we going to do about the 2100? We have collection of a note receivable of 2040 plus interest of 60. Okay, so here we go, 2040, and it's a note this time. It's not an accounts receivable, it's a note receivable. And we have interest revenue of 60. Okay. Oh, let's see, what do we got? Oh, we got an error too. Okay, we're not done yet. All right, so let's keep. So everything we've taken into account except the error. And we saw the error up above. We had a check for $780 per the journal entry. But what does it say down here? Check number 18 was written correctly for 708. Okay. For payment on account. It cleared the bank correctly at 708.62. But the company made an error and recorded it as 780. Okay, so let's think about accounts payable. Okay, we would have recorded the check as 780.62. That's the error. Should have been 708.62. How much is the error? Put it in the chat. It's 72. Great. So we deducted 780 from cash. We should have deducted 708. How do we correct it? Add or subtract? All right. Okay. So this is the company posted the check wrong. So we're going to add 72 here. Okay. Now let's check on this side and see if we are reconciled. Okay. So we're going to add up all these numbers. And it looks like we are reconciled. Okay. That is a really fast version, Mona. I hope that helped. So Now for journal entries, we're going to do only what's here, only on the book side. We don't make journal entries for what's on the bank side. Okay. So here we had a collection by the bank, should be cash, and it should be notes receivable. Okay. And it's going to be for 2040. All right. Then we have interest revenue of 60. So that's going to be cash increase because it's in addition to cash. So we debit. And the credit's going to be interest revenue. Then we have an NSF check for 230. We're crediting cash and we're debiting accounts receivable because it's a customer check. Okay. Then we have a service charge. Let's do bank charge expense and cash. Note that for every single one of these adjusting entries, cash is involved. And I don't remember what it was for. $35. Ooh, that's a lot of service charge. Okay. And we have one last journal entry, and that's for company posted the check wrong. And remember, I said if it's a company check, it's going to be to accounts payable. So we're debiting cash because we increased cash. And we're crediting accounts payable. And we're just going to do, and it's $72. Okay. So you make correcting journal entries for just the stuff on the book side. All right, everybody? Everybody good? Everybody ready? So I think that JP, the practice exam is a good kind of layout. It's similar to the regular exams in that there's a lot of problems. There's no vocabulary on this exam. So yeah. And I am really sorry. My time is running out pretty fast here. I was going to go to 3:50 and I got other stuff to do. So Vincent, question 4, did you look at the answers?
Yes, I'm trying to find how did the rent expense was like 3,000. I've been trying to look. I've been trying to find about that one.
Okay, let's just do that one because it's I've been in oops. This one?
Yes.
Okay. On September 1st, Booktree paid the annual release. Oh, that's weird. Oh, let's read the instructions first. Booktree had separate situations. The accountant is preparing annual financial statements at the end of December and wants you to prepare the adjusting journal entries. Annual rent is $12,000. So how much is it a month?
12. So 12,000.
Oh, wait. Hold on just a sec.
All right.
I'm gonna bring cookies on Wednesday. So then we can just do it a card. Yeah, it's just. Oh, perfect. Okay. Okay, yes, from the transfer. Oh, that's perfect. Okay. Perfect. All right. See you. Are you okay? All right. I'll be ready in a sec. Okay. All right. So how much is it a month if you pay 12,000 a year?
6,000. Wait. 12. Is it 1,000?
So 12,000 for 12 months is how much per month?
Oh, 1,000 per month.
Correct. Okay. So you know the journal entries, debit rent expense, prepaid rent, because they prepaid it, because it says here they paid it already for the whole year. They have not done an adjusting journal entry since October 1st. But they've been in the building the month of October, November, December. So you take 1,000 times 3 and you get 3,000.
Wait, how did they get 3 again? Can you say that one more time?
Sure. So they're making an adjusting journal entry to recognize the rent expense so that the income statement can properly reflect all the expenses. Okay.
Mhm.
Well, they haven't done an adjusting journal entry since. Why don't you look at that? Okay, hang on. And my battery's
They
out.
haven't done that since October.
Right. So between October 1st and December 31st, how many months have gone by?
3?
Yeah, month of October, month of November, month of December.
Alrighty.
Oh, wait, JP. No, it is not September through December. It is October through December.
Yeah, 3 months.
Yeah. So even though they made the annual payment September 1st, they clearly made an adjusting journal entry September 30th. So it sounds like they're doing financial statements every 3 months. So, okay, you understand. Okay. All right. Okay, guys, I will see you all tomorrow or Wednesday, depending on which class you're in. I have multiple versions of the exam, so that'll be fun to grade. And
Yeah.
don't
And
stay
it's
up
not
all
going to be a
night.
lot of questions. It's not going to be like 36.
No, that question came up in class today. There's more questions in the practice exam, Vincent, just to give you more practice. But in general, it's going to have the same look and feel as my regular exams, just in terms of length and types of problems. See you later, Jeff. Okay. All right.
So it's also 100 minutes?
It's a 100-minute test. Yeah.
Okay, and will we have the formulas like last time? With like the gross margin and the profit?
No, but you're not getting a ton of formulas, just some basic ones like you said, gross margin, how do you calculate profit, things that you would already know from doing the multi-step income statement.
Right, okay, thank you.
You bet. All right, see ya.
All right, thank you.
Have a good
Bye-bye.
day.
You too. Bye-bye. Bye, Mona.